We talk a lot about respecting the trend here on these videos, and the reality is that we want to respect the trend until it ends, and at some point all the trades end, the trends end. And so what I wanted to do today is just look at and reiterate what we continue to think is the best trend and setup there, which is to be long the energy space, and that really runs the gamut of oil stocks to all sorts of energy-related parts of the market, even more into the mining area, which is not really directly energy, but kind of somehow related. Um, Being long that versus being short or underweight technology for the time being. And so one way of looking at this is just looking at our market rover. So for example, if you look at this green background here on the market rover, you can see, and I'll make this a bit larger so you guys can see this, you can see the market rover told us clearly to start getting long or bullish the oil market back in the autumn of 2020. Oil is now about 200+% higher since then. You could even look at this on if you just want to look at equities at the XLE, which is energy equities. If you look at that, again, a trend that is still firmly in trend, told us to be bullish that around February of last year, so about 12 months ago, and that has also almost doubled since then. So strong trends. Now, when we put this together with the no longer bullish trends in technology for the time being, we do think they will come back at some point. It looks like this. And so what I'm just going to do is I'm going to take the energy sector and I'm going to divide it by the technology sector. These are just the S&P 500 tracker ETFs that track those individual parts of the market, and we get to this particular chart. Now I'm going to get rid of these moving averages because they really just distract us from what's really going on. But there's really two main things I want to point out, and I have mentioned this before. Certainly we talk about it to clients every week, but basically, and this is purely the optics, the technicals, but it does tell a very important story. Around 2020, in the autumn, in the spring, excuse me, which is basically the COVID lows, we started to see the first signs of a relative outperformance of energy. And it took a tracing out of an, if you want to be technical, an inverse head and shoulders pattern, which is these three green sort of little half circles. But now we're actually breaking out of it. So that's the bull case. Now, if you peel this chart back enough, you could come to a bearish conclusion, which I ultimately actually don't think is bearish, but it's just maybe a bit of a pause. But you can see we're bumping up against what used to be resistance, or excuse me, support in this ratio of energy versus technology, and now maybe it's going to be resistance for a while. I don't think that's going to last very long. I do think energy is going to act very well for the foreseeable future. We will see hiccups here and there as we get geopolitical news that may be better or worse, and economic data that gets better or worse. But I think a trend here is very clearly intact. Now, if you want to look at this another way, and I'll just kind of throw this out there, this is really has nothing to do with the charts. Just quickly bringing it back to the camera. The energy sector is right now is 3.8%, maybe 4% if you round it up, of the S&P 500. Historically speaking, the energy sector has been closer to 11% of the S&P 500. Like the makeup of how much those stocks make up of the overall of the overall S&P. So we're still in from that perspective alone in very, very early days. Last thing I want to do is I want to quickly show you. So we showed you how we've been bullish and we want to be bullish energy and all that space, not only in absolute terms but also in relative terms versus tech. Just again to reiterate, I've showed this now many, many times over the past weeks. Just again, the importance of respecting trends, right? So our market rover told us very clearly that you want to go back and be bullish. The Nasdaq 100 back in right after as we came out of the initial, or actually in the middle of the initial lockdown in the March-April period of 2020, and it told us though to get out of it, and that the trend was no longer bullish, as you can see, as represented by that black background up there, around mid-January of this year. So again, you have a very clear pattern here whereby we want to continue to be bullish at the energy space, but not so much bullish tech for right now. And this is exactly also what we're going to talk about in our webinar this week, is how to respect the trend, how we can find new trends that give us these kinds of moves potentially, and ultimately when the trend ends, it also very clearly told us. Because if you don't have a signal to get out, one is risking of giving up a lot of those gains. So see you guys in the webinar. See you soon.